And the wind fucking pumps you around.
Darkhead. All right, good morning, everyone. Let's get going here. Okay, Friday session on the S&P was a bit of a non-event. We just kind of chopped around sideways, even with a hell of a lot of maybe risk for carrying stock over the weekend. Continue to see the same sort of outperformance in the S&P. I mean, we've got every bit of worry in the world. I mean, you could have a disastrous result out of Europe over the weekend. You've got Chinese issues going on, all sorts of problems, and yet the U.S. market just continues to kind of hold on to its bull market status. So, yeah, well, I mean, we basically on the weekend we saw the Crimea referendum. Obviously, everyone voted as expected in favor of Russia rather than ceding to its own union, and we're going to see over the next couple of days what actually happens on the back of that. The international community is obviously not going to recognize it. We're going to wait and see if they start to impose sanctions and things like that. But bottom line is, I mean, what's happened is obviously what the market expected. What's going to be interesting is seeing what comes next. All right, Asian markets were a bit mixed over the weekend. We did have China that finished higher for the first time in it seems like a long time, with any sort of significance, up about 0.5%. Nikkei down about 0.5%. So all in all, we were kind of flat in the Asian region. I mean, you did see the yen that weakened a touch in the session. Which I think is bullish considering what's happened over the weekend. Right now, I think everybody's kind of still trying to digest all of the news. You've got a real lack of movement this morning in terms of cross index futures pricing and between the currency crosses and commodities all alike. So we're going to wait and see how the market can digest this news out of Crimea. But right now, it doesn't feel like there's any panic out there. I think like we said, what was expected to happen happened. So we'll continue to watch these things going forward. Remember, we're going to want to watch our risk indicators. We're going to want to watch the Japanese yen. We'll watch the euro dollar, and we'll obviously watch the futures indexes to give us an indication going forward. There's no corporate action out here locally today. And then today, another light day in data. We've got CPI kind of across the Eurozone there. And then we've got Empire Manufacturing, net long-term TIC flows, industrial production and capacity utilization in the States. So nothing too major happening today. Just to give you guys an outlook for the week ahead. Tomorrow, we've got Remgro out with sales numbers for first quarter 2014. We've also got U.S. housing starts and consumer prices. We've got China property prices on Tuesday, which I think will be watched quite closely. We've got the FOMC policy decision on Wednesday, SA retail sales, and the biggest one of the week possibly for us here locally is Tencent, which comes on Wednesday as well. That's going to be full year 2013 numbers, if I'm not mistaken. On Thursday, we've got a lot of stocks going to ex-div for over the long holiday weekend, which will be it's the last day to trade. Sorry, Investec. We'll get Imperial, S&Ts, LBH, CUSBs, First Friends, Growth Point, MTNs, MMIs, RMH, and RMI. So lots of different stocks are going to be last day to trade on Thursday. Remember, it's going to be a holiday shortened week, and I believe, if I'm not mistaken, is it closeout on Thursday? On Thursday. So Thursday is going to be a monster day for us. Let's keep that in mind. We're going to be building up to that. And then we've got obviously initial jobless claims in the States, as well as bank stress tests, U.S. existing home sales, and then the U.S. credit rating on Friday. So not a hectically busy week, but Wednesday and Thursday will definitely be ones to watch out for. All right, let's get into the maps. Right. I mean, first thing I wanted to just take note of before we even start looking here is just we had quite an inflection point, I think, at the moment. With what's going on, we've seen a correction in a lot of the equity markets. Remember, we showed a couple days ago the U.S. market obviously lagging some of the other equity markets, but I think it's going to be really important to see if some of these levels can hold. Germany, you can see the DAX. We managed to hold 9,000 on a closing basis. We did drop it at the beginning of the session on Friday, and we managed to hold it quite nicely. This is a big level, and remember, we've pulled back. I mean, you're looking at a pullback of 8% off of the tops, which is a reasonable pullback. The FTSE is looking very similar. Actually, look at a 2-year here on the FTSE, so you can kind of see how important I think that this level may be. Bottom line is, I'll just shorten this up just a touch so we can actually see proper candles. There we go. Okay, so bottom line is, I think here in the FTSE you can see that we we also kind of holding on trendline support. We're right at it more or less on Friday's close. These are really important levels that need to hold in Germany and in London. These levels drop. I think that can be a really, really important sign going forward that we can see a bit of an unwind in equity markets. This is to me, this is going to be a bit of an inflection point on the next 2 days to see whether or not these levels and these indexes can hold. All right, jumping into some of the local stuff, we'll have a look at BGA. Shorten that up a touch. And BGA, you can see here, obviously we've popped up nicely above the 35 level. Beautiful. Finally managed to get up above that. But what's interesting here is that you can see in terms of closing basis, we've kind of popped up above the most recent close going all the way back to September. So we've got a new closing high going all the way back to September because we have kind of popped above that closing high there. I think that's really important. We're right at the 200-day moving average. In fact, we closed slightly above the 200-day moving average on Friday. And I would fully expect us to fill the gap somewhere here around 145 in the next few sessions. I don't think anybody's got the stock on board, and I think that we'll probably see that gap filled rather quickly. Remember, this thing's starting to run now all of a sudden when the market's falling, so that just shows you. All right, Billiton's. Have a look at Billiton's. Also look at it here on a 2-year and see Billiton's held rather well into the close on Friday, and you can see there we're right at trend support as well in Billiton. I think around $320, 320, 321, somewhere in there. Maybe not a bad little spot to nibble. Remember, in London, if we look at this chart in London, we still need to hold the 1750 level. Let's shorten that up a little bit so we can see the 1750 level, which is also very, very crucial. So we'll wait and see if those two levels can hold in the next session or two. And then the next one, the last local one that I want to look at here is CFR. CFR dropped support on Friday, only just, but dropped support on a closing basis, but closed right at the 200-day moving average, more or less, and right a touch below, but basically right at the 100 Rand level. I think this is important on a couple of levels. The 100 Rand level is important psychologically, just because it's 100, a big round number. The 200-day moving average also obviously important. What I think you would want to see in order to buy back into this thing is for this thing to regain support here. Call it at 150, 100 Rand 75 cents, somewhere in there. If we can regain support there, then I think it's a good little opportunity to nibble and possibly get back on the boat on CFR. And the last one I'll show is just Barclays in London, and you can see here, I mean, this thing's really dropped significant support, and it dropped it a few sessions back, but bottom line is we've definitely dropped support here in Barclays, and we've got a bit of a lower target. I find what's really interesting out of this is that, here in January when you had Barclays, London spiking up to maybe several month highs, You had local Barclays Group kind of selling off. You've got the total inverse of that happening right now. There may be some sort of strategy going on there with some of the hedges at the moment, and that could be part of the driving factor for that. So that's, I guess, one of the reasons why I wanted to show that, that maybe because this thing's coming down, they're actually looking to buy the African group on the back of it at the moment, and there's a bit of a switch out or a force out going on at the moment. And that's it for today, guys. Thanks a lot.